motivational session from our speaker about using the tax code to build wealth. Okay, now we got you here with about tax strategy to save wealth. Okay, so that made it to save struggle. So we want to make sure that you guys get it out, but know that the purpose is to use the current tax code to build wealth. Now she's going to say this, but I'm going to say this as well. As you know, the tax code changes every year. So what she is saying right now is current, but you can't refer to it when it's no longer current, okay? You can't hold her accountable, you can't hold me accountable. Who else can you hold accountable? You, if you use it after its expiration date. Did I do good with the disclaimer? All right, this is Catrina Kraft. She is a CPA. Who knows what CPA stands for? Y'all sure? Okay, you just not cardiopulmonary assistant? Okay, good. With business and financial advice for over 20 years of experience in accounting, tax planning, and business strategy. She has been a part of several startup companies as well as Fortune 500 companies. This wide range of experience has given her a deep understanding of how businesses operate, which she now uses as an advisor to assist small businesses with growth. Now, in addition to her professional achievements, Catrina is also an educator. She has shared her knowledge of accounting and tax strategies through various forums, including the Michael Basin Show, the Ricky Smiley Morning Show, CW33, WFA, Channel 8 News, and as a contributing writer in Easy Accounting for Real Estate Investors. All right, so without further ado, I'd like to present you this evening's speaker, Ms. Catrina Kraft.
Thank you. Hello, everyone. I'm so excited to give you all some tax knowledge. And we're going to talk about how to use the code to build wealth. I know several of my clients will say, I want to pay what Trump paid. I'm like, well, he may be going to jail. So as January said, there are rules. The tax code is about 2,300 pages. And when you put the regulations in, it could be over 60,000 pages of information. So you really can use rules and the code to build wealth. So disclaimer, January did one disclaimer, I'm gonna do another. The information contained is for informational purposes only. You need to advise with your tax advisor, your accountant, to make sure it's relevant to you. How many of you have asked your cousin, how much money did you get back? Okay, I know a lot of people have. That doesn't mean you're gonna get back the same amount. So you have to know the rules and what applies to you. Are you satisfied with how much money you pay in taxes? Nobody? Oh, no. Okay. Are you confident you're taking all the deductions that you can? No. All right. It's 60,000 pages in that tax code and regulations. Are your tax and investment advisors giving you proactive advice? That means you're not waiting until April 15th and giving your box of receipts. Proactive means right now. Tax planning time starts after you file your tax return for the last year. So you need to be prepared now on what you need to do. This is very interesting. Chief Justice William Rehnquist, he was 33 years in the Supreme Court. He says there is nothing wrong with the strategy to avoid the payment of taxes. The Internal Revenue Code doesn't prevent that. So that's what I want to teach you today is there's nothing wrong with it. Don't be afraid to take those deductions. The IRS promotes business owners. I work mostly with business owners because if you're a W-2, I can't really help you. I'm sorry. Because the tax code benefits business owners. We employ as business owners almost 40% of the staff and employees in the US. So they want to promote us. They want us to stay in business, so they give us breaks. So I do assist business owners improve their revenue, improve their profitability, and better manage their cash. A piece of that is knowing the tax laws, getting money back from Uncle Sam so that you can be more profitable and have a better cash flow in your business. I'm an entrepreneur at heart. I've been an entrepreneur for over 20 years, and I have a certified public accounting firm. I also have Kraft Entertainment CFO. I do work with entertainment. Anybody knows anybody in entertainment business. I work with Grammy winners, also comedians and a lot of people. Y'all don't want to know about that. But I love working with entrepreneurs and helping entrepreneurs and business owners. So today we're going to talk about how to use the tax system to build wealth. We're going to talk about business deductions, and then we're going to talk about what is the best legal structure for your business. How many people are sole proprietors? That means that you haven't filed like an entity structure and you're operating maybe under your name, or maybe you have a DBA. You could be a sole proprietor. So we're going to talk about, is that the best structure for you? How many are LLCs? How many know how they're taxed as an LLC? So did you know the IRS does not recognize LLC? The LLC is a state entity. It's not an IRS entity. So you have to know how you're taxed. So if you tell me you're LLC, I need to know how you're taxed. That's what's important, because that's how I'm going to give you tax strategy. Tax planning means looking forward. We want to minimize your tax. We want to plan ahead. We don't want to wait until you give me your receipts, because at that point I'm like, I'm just recording what you've already done. I can't help you. So we want to look forward instead of just recording history. So during this session, I'm going to talk about business expenses. We are all business owners or want to be business owners. So I want to prepare you in advance on what you can take. Did you know the IRS says you can take anything that's ordinary and necessary in your business? Anything that's ordinary and necessary in your business. That's very vague. Very vague. So what you have to know is what's ordinary in my business? What's common and accepted in your trade or business? So what's common in my business may not be common in someone else's. So you're a caterer, vegan caterer. So what you can deduct for food and giving away to other people samples, I couldn't do the same thing because that's not my business. So you have to know what's common and accepted in your trade or business. Is it necessary? Okay, I say I may need a private jet. Is that necessary in my business? It may be. It may be. If I'm flying every day, every other day, and it's cheaper or better for me just to get a private jet, it may be good for me to get a private jet. And the IRS would allow that. I have a couple clients actually that have private jets. We deducted 100% of that jet. Depends on your facts and circumstances. So that's why you have to know your law, you have to know your business. So let's talk about home office. How many people have a home office? Everybody should be raising their hand. I'm going to tell you why. Either you need a home office or there's another little rule I'm going to tell you about that can save you big money. Okay, so let's dive deeper into the home office. Internet, you need to deduct your internet. Okay, but there's ways to deduct your internet. Depends on if you're a C Corp, if you're a partnership, if you're a sole proprietorship, S Corp. There's different ways you have to do it. That's why you have to know your laws. You have to know the rules for each one. You can pay yourself rent for your home and pay no taxes. We're going to talk about how you do that. How can your company pay you rent $2,000 a day and you deduct that and pay no taxes? We're going to talk about that. Turning your backyard oasis into a deduction. So you have a backyard, but maybe you have corporate events in your backyard. Your corporation can pay you rent for using that. We'll talk about some of these things. So your home office deduction is allowed, okay? And these are the requirements. So make sure you follow the rules. We talked about, I like to be creative, but I'm gonna follow rules. And what I do ask my clients is, how risk adverse are you? If you're not risky or feel like you wanna challenge the rules, because I'm gonna come with you to the IRS if they challenge something, I'm gonna have to code. But if you don't feel safe in doing that, I ask my clients, because I don't do it for them. You need to feel secure in what you're doing. And a lot of people are scared to take the home office. You shouldn't be, because the IRS actually They allow the simplified method. So the requirements are principal place of business, but it doesn't have to be. It could be regularly and exclusively used for administrative management. So say for instance, I have an office, I do CPA work there, but at my house, I also have clients that come visit me, or I may do some administrative bookkeeping, accounting type things for myself, not for my clients. I can deduct a home office and my office. So just because you have an office does not mean you cannot take it personally as well at your home. You meet customers at your office, home office, you store inventory. So who has inventory here? You can have your whole garage as inventory and write that whole garage off. Build some shelves around the place. Have a closet. You can have a room with inventory. That whole portion can now be a home office or a space that you're going to deduct. So that's huge.
So, question, so on the home office, is it just the square footage that you use as your business and not your personal living quarters? So I would have to know the square footage of my garage and the areas that I use.
Right, and it's different. That's where it comes in, where you have to know if you're a C corp, then your corporation pays you rent. And that rent could be based on fair market value of the space of surrounding areas. So if you were to go to extra storage, how much are they gonna charge you? You can use that as your formula for calculating in a C corp.
Okay.
If you're an S corp, then you would get a percentage. So say for instance, your home is 2,000 square feet and you're using 200 of that as office space. Then you get a tenth of all of your expenses.
Okay.
So your expenses would be electricity, gas, water, house cleaning, flooring. You get some new flooring in your house. Like we just had a leak in our house. So now we have to get new things. My office, I told the contractor to divide up. I want new blinds deduction. I want some floors deduction. I want something built in this office. It's a deduction because now that's your home office. The furniture, home office deduction. So all of those things you need to think about. Okay, any other questions on home office? Yes.
What are good businesses to run out of your home?
What is what?
What are good businesses to run out of your home with the home office?
You want to run the business out of your home?
Yeah, if we're gonna take advantage of this, what is the business to have?
Any business. Yeah.
But like,
Any
what-
business,
like-
any business you can run from your home.
um,
You can do it. Now, for you, say for instance, you're cooking and you're at your home. You cannot do it because you're using that space to cook for your kids unless you tell your kids, we're not cooking in this kitchen because I'm taking this deduction right now. But you got to go outside. But you cannot use the space. Say for instance, you have a bedroom and you're sleeping in that space. You would have to section it off. So you can still use a portion of it, but make sure too, you take a picture. I love to have proof. The IRS comes to me, oh, no, I have a picture of this bedroom. Here's my computer, here's my desk. You want to make sure you have proof because then if you move and they come audit you, you want to make sure you always have proof of that documentation.
What about doing like a bakery out there? Can you use that still as a-
See, that's what we're saying, because you use that kitchen for other things. You wouldn't be able to, but if you store supplies somewhere, not in your regular pantry, there may be another pantry that you built, you don't cook. But because you use your kitchen, unless you just don't cook personally.
Y'all can't cook, think about it.
You mentioned you can rent 10% or whatever your house and take it reduction of the rent.
So for C corps, that's how you would do it. And it
But
has-
then does it also become an income to you as an individual?
Yes, so that's a great point. For a C corp, it becomes income, but then that's when you deduct your utilities, your, house cleaning, then you deduct everything so that then that basically washes out. Because you can charge whatever rent you want. You just can't go over fair market value. So what you would do is look and see, okay, I have a room, how much would it cost for me to rent that office somewhere else? If I went to a co-op space, then you can use that, and it has to be in your area, same size. That's how you figure out the most you can rent. And you can go lower and make sure you don't have any problem, that's fine. Yes.
You just mentioned house cleaning.
get our apartment, our spaces clean, that could be deductible.
Yes. So what you need to ask is your home, the person's cleaning your home to do two different meals. Do one for your office. You want to deduct 100% of that. If not, then you'll have to allocate that percentage. So like we talked about, 200 over 2,000, you do 10% of that. But if she creates a separate bill, then you get 100% of that.
And that's one, so, I'm sorry, so you mentioned C corp, pay yourself in. I'm an S corp, so I can't do it that way.
So you can, but it's a little bit different in the S corp. You're gonna do the allocation method.
Yeah.
Yeah, so you just gonna do the allocation method. So there's an actual method, that's what we've been talking about. But then there's a simplified method. Let's just say, I don't wanna keep records. I don't wanna have to prove to the IRS that this is my electricity, this is my water, this is my house cleaning. In 2013, that's when I said, the IRS wants you to take over the game. Now you can do $5 for every square foot. It's capped at $1,500. But that's easy. Okay, I got 200 square feet in my office multiplied by 5. I'm taking the deduction. Less paperwork, less hassle. I don't have to track anything. So it relieves you of having to keep those records. Pay yourself rent. Take a deduction and pay no taxes. So let's talk about this. This is called the Augusta rule. And it started because there was a golf tournament in Augusta and people were renting their houses and they didn't want to pay taxes. So now what you do, and that's what happens, people lobby for these tax codes. Rich people lobby for the tax code. So build your wealth using these tax codes. You can use your home for 14 days or less. So S corp and C corp, no. 14 days or less during the year and get a big tax break. Charge your S corp $1,500 a day for using your house up to 14 days. You pay no taxes on that money, nothing. But you can't have the home office in this, so you have to choose. So what you would do is you can look at Airbnb, see how much it would cost to rent a house for a day that's in your area. Or you can go to venue spaces. How much, they're gonna usually cost more. How much would it cost to rent a venue space for a day? So in this example, we paid $1,500 for the day. We rented it for 14 days, $2,100 tax break, $21,000, I'm sorry, tax break for me. What could you do with that money? Let's build some wealth.
So who in here has an S corp?
S corp or C corp, you could do it.
Can they rent my house? I can have the money back. I'm just saying.
So pay yourself for a take a deduction, pay no taxes. These are the guidelines, so you can snap a picture of that. No entertainment purpose, it needs to be business, so you can't say I'm having a party. Now you can have a Christmas party at your house and take it. That's one loophole the IRS allows. So let's say you want to do something at your house for your company, you can rent it to yourself, but you can't entertain your patients, prospects, or customers. You pay the fair rent. You can't be exorbitant on something that's not fair market value. And it's somewhere where you reside. Say you can have a house, an apartment, a condo, a houseboat, a mobile home, all of those qualify. So you need to have the LLC that's taxed as a corporation, S corp, C corp, or a partnership. No sole proprietorship. A dwelling.
Okay.
So we'll be renting out for like 21.
You're renting out your home.
Yeah, it's like
14
previous
days.
slides said 21,000.
Mhm.
If I'm like, I have $21,000.
You don't have 21,000.
No, say I'm gonna have a $21,000 party for my employees, for my Christmas party.
Well, the problem would be is it's a daily amount. So unless you can rent your house out for 21,000, you have like a mansion or a combine that's worth 21,000, then yes. But you got to say how much is it per day is reasonable.
Okay.
Yeah.
So if I have an S corp, I can rent my house out for 14 days and I can throw a holiday party.
Yes.
Okay.
Yeah.
And were there limits to the amount on the party on the next slide, or it's just they have to pay to rent the space for fair
No,
market
just
value?
pay to rent the space, but all the food, alcohol, decoration. I mean, it's a party for your business.
Is that once a year or what's the limit on that?
They have once a year, but then they have another one where you can do like a bonus party. So it really is gonna depend on the amount. So I would say that's going into the risky side, so depending on how risky first, but I would challenge you. I would go to the IRS for you. Okay,
All these transactions, you have to run those through the books so they show up on your P and L.
yes,
Okay.
because your company is gonna write you a check for $21,000. That's how you get your deduction.
Okay.
Then you don't have to report this on your individual return because it's 14 days or less.
Okay.
If you go over the 14, then you have to report that as income.
Okay.
If you have that documentation to show the $1,500, or is that just a standard?
No, I'm just giving you this as an example.
That's
You need a fair market value. So go to Airbnb, go to venue centers and see how much it would cost. If you have a house that you would rent, how much would it be?
Is there a difference between having a party for customers or having a party for your employees?
Yes, so this, like we talked about here, you can't do the patient's prospects of customers. So it's a loophole that the IRS allows for your employees.
Okay.
How are we on time? 'Cause I got a lot.
One quick question. What about like maintenance on your property?
Yes, so home office, so maintenance, so like for instance, I tell people, you buy paper towels, if you home office, you got sodas, things that you would have in your office. Go to Walmart or wherever you go, to a separate receipt using your business credit card for those type of items that will be in your home office.
I mean, like,
So paper towels, maintenance, yes.
like, let's say I get my driveway replaced.
Well, it would depend on the driveway, because what are you doing on the driveway? Are you having
People come
customers
over
sit
for-
outside?
No, I have people come over for a Christmas party.
No.
No,
It's too risky.
very risky.
I like how you think, they stay creative, that's that outlet.
But we can't deduct the yard, somebody cutting the grass.
It depends on if you're gonna have events there, so you can't do it every month. So say for instance, you're doing a Christmas party, and you have somebody coming in that's gonna cater, you're gonna have the event outside, you have tents and all that.
What happens if I use my yard for stages? Like I use my backyard for stages.
Okay, what do you do? What's your business?
I do graphic arts, so I customize this by anything that makes you smile. So let's say if I do a toast, I have somebody come out and model my toast and then pick in my backyard, because I redo my backyard.
The one time, yes. So you can't say, okay, unless you're taking pictures every week, David, the yard man is coming. I mean, but yeah, you can do it.
I have a piggyback question. If I have to get a new driveway built for my work truck, because I have a 1-car, 2-car garage, but I need a place for my truck to park, my HOA don't let me park on the street, whatever, is that taxable?
It possibly could be.
Because
Now you have, that's gonna be a space, kind of like inventory what we talked about, so that possibly could be. So what I would do is look at the tax courts.
Okay.
That's the other thing that you need to be aware of, is there are tax cases where people don't try everything. I mean, people have deducted horses, if they can't do something, I don't know. But there is a case probably for anything that you thought of. So that's when we go to the tax court and see has it passed, and then has it passed in your jurisdiction? Because every jurisdiction has one. So that's another thing you have to watch out. Okay, so on your, you're going to the internet. So home office, then pay yourself rent. So now we're on the internet deduction. You work at home, you're probably using the internet. Who uses their internet at home? Are you deducting it? Okay, if you have the home office, your monthly internet expenses, it could be deductible, but there are different rules. So that's why you have to know, sole proprietorship, corporation, or partnership, it works differently how we deduct those. So if you're a Schedule C sole proprietorship, you claim it on line 21 utilities. So just so you know, that's where you're gonna claim it on your Schedule C. Deduction when you operate as a partnership. Now, the problem with the partnership is that sometimes those expenses are not deductible on the partnership return. So you have to deduct it on your personal individual return. So here are the two ways that you can do it. The partnership can reimburse you. Okay? Or you can put it on your personal tax return. Okay, when you operate as a corporation, then it's an employee reimbursement. But you should be an employee of your. So the corporation deducts it and you receive a reimbursement tax free. So corporation give you money, $100 a month for your internet, $1,200 you get tax free. And what happened is, I'm not sure if you remember the Tax Jobs Act. That was the job act that President Trump put in place. And so there's some different deductions that disallowed. If you're an employee, you cannot take unreimbursed expenses. So you have to reimburse yourself with these things, so you can't deduct them on your itemized tax return. But that goes away in 2025. I don't know if you all knew, it was a whole hoopla, but then it's gonna turn back in 2025, and then there's gonna be new tax codes you gotta learn. So that's why you have to keep up with everything. So substantiating your home internet expense. So you shouldn't have a problem with it unless, you know, the kids are on it all the time and you're not tracking how much time you're using. So that could be the only issue that I would say. You can just track. There's software that tracks it, there's apps to track it. So most of the time I'll tell my clients, we're gonna do like 80% for internet. So it just kind of depends on what you're using it for in your business, but I would ask the client. Meals in 2023, they going back to 50%. Don't know if you know, it's 100% last year and this year. If you eat in a restaurant, 100% deduction. If you eat in a restaurant or order from a restaurant and take it back to the office. Or order from a restaurant, take it to your hotel, whatever, but you order from a place that has a seating facility. Now, if you go to a grocery store and get like a little sandwich, it's 50%. So that's why you have to know the little nuances about the different groups.
So is that when you are meeting a client and maybe an employee, if you're doing an offsite review?
It could be employee, client, prospects. I'm a CPA. Everybody a prospect.
Right.
I go to
But it's
dinner
not
as a
your, it's
prospect.
just not your personal.
Right, not your
Okay,
personal
okay,
business.
all right.
Good point. So
Okay.
people, no, it's not just your personal. This is business related needs.
So will that be classified as entertainment though?
No, entertainment is entertainment. Food is not entertainment. So entertainment.
So if I'm taking a client to dinner, that's not entertainment?
No, it's meals. Now, if you take them to a Mavericks game, that's entertainment. But if you go to eat before you go to the Mavericks game, you deduct the meals, but not the tickets. But then there's a way around that. You buy a suite and it's advertised. Because you have to make, so there's different ways. And if you buy a suite, the meal part is deducted. So there's different ways you gotta know to maneuver this tax code. Yeah, no golfing. So entertainment went away in 2013. When was that tax bill? Let's see. Oh, yeah. 2018 to 2015, no entertainment. It may come back, but for right now, no entertainment, no golfing deduction. You can still do it, just can't deduct it. Games, you know, football, basketball, whatever. All of those teams, you can't deduct entertainment. Like roller skate, I don't know. Take a climb roller skate, no, that's entertainment. All right, so we talked about you can find your software and apps to track it. These are your meals. So certain employee meals for the convenience of the employer goes back to 50% in 2023. So say for instance, you're at a company and they can't get out for like 10 minutes. Is all they have for lunch break. You can deduct their meals because that's your convenience to have them to stay there. Office party remains 100%. So we talked about parties you have in your office, so you have in your house and you pay yourself and all the things that come with it, meals, food, drinks, decorations, all of that is 100%. Okay, here's some things you may want to snapshot this. I don't know how good this is, but as far as clear, 2021 and 2022, because of COVID, the IRS wanted to incentivize restaurants. So that's why the 100% came in, because a lot of restaurants were struggling. So 100%, but then law. Now, this is post, so in 2023, it's gonna go back to this post rule. So those are the rules right now, unless things change again. And in 2025, we know they will, but we don't know. Entertainment, we talked about that. There is no deduction. So the IRS doesn't allow owners sporting, event tickets, plays, deep sea fishing, concerts, all of that is no longer deductible. Okay, we talked about ordinary and necessary. So business trips, how many of you all have to travel for your business? So ordinary, necessary, hotels, airfare, ground, tips. You can take your laundry. Don't take your whole bag of laundry, but you can write your laundry off while you're there. Take a couple of suits, get those done. Write it off. Conferences, yes, it's business related. It includes that. Now, there's one little trick that I like to do. I know that Fridays I have meetings and Mondays I have meetings. Those are business days. Saturday and Sunday, no meetings, I have fun, but I expect all of it because I had to stay open. So that hotel for Friday, Saturday, Sunday, Monday, if I stayed all the way, would be a deduction.
So
Because I had business in between those 2 days. And the holiday weekend is not included.
So is meals still part of the travel deduction?
Meals, I don't consider it travel, but you do get 100% for meals if you're in the restaurant. You still follow those meal rules.
Okay. Like each city has like a per diem.
Mhm.
Do you have to adhere to the per diem?
No, it's
Okay.
either or. So you're talking about the government per diem.
Yeah,
You could do either or. I find that it's better to keep receipts, but if you're not good at keeping receipts, you may want to do that per diem.
okay.
And I didn't know if you do, if it's under $75, you don't even need to keep the receipt unless it's lodging.
Right, okay.
So you're giving tips to people, or I gave somebody $50. You don't need a receipt for that. Just jot it down so you remember what you're doing and what you're paying. But generally, if it's under $75, unless it's lodging, you do not need it, but the full publication is there. I like to give you the information so that you know the rules and the code. Okay, this is the per diem that you're talking about. This is the governmental per diem. Each location has a different amount that you can get. So if you want to use a per diem for your employees, you can do it. So they know how much they'll get when they travel. So this is the allowance for lodging, meals, and incidentals. Okay, but as a business owner, we can't use that for lodging, meals, and incidentals. Ours would only be good for the meals. We still have to submit our lodging. But this is good for the employees.
And these slides will be available online. Anybody know where?
Are those
Link tree. There you go. Link, we'll tell I say link.
How many of you all?
Yes, you can.
Who drives your car for
Oh, I
business?
thought you said living.
So the rate increase is 62.5 cents in July. Didn't know if you knew that. So what you have to do is track January to June. It was at a rate of 58.5, and then it went up because gas went up. The IRS was trying to help us a little bit, I guess. So they're probably gonna take it back down. Gas is dropping. So you need to have 2 different rates and 2 different times where you're tracking. Now, if you have your home office, this is why I love the home office. You got a home office, now you go to your office. It's no longer a commute. Now that's a business trip. So every day you go to your home office, from your house to now the other office is a deduction. You need to be tracking that. Miles IQ is one app. QuickBooks, Self-Start, I think they have an app where you can track the miles. You swipe left, I think it's just right. So, make sure, that's why the home office to me is important. Not so much the rent, but this mileage, because if you drive an hour away, that could add up. All right, so we're gonna do a little test. I'm gonna play a little game with you. So I'm gonna say, is it on? Remember, the IRS says you can deduct it if it's ordinary and necessary. So that's on, or no, you can't deduct it. Let's see how good we are. Okay, a pro bodybuilder used body oil to make his muscles glisten in the light during his competition. He deducted buffalo meat, because it's lean meat, and special vitamin supplements to enhance his strength and muscles. Did the IRS allow that?
On.
I mean, say on. I mean, say no. All right, I tricked y'all because they allowed the body oil. They didn't allow the meat and they didn't allow the vitamins.
How come?
Well, they said that this special vitamin supplement, they felt like he could use this, anybody could use those. They weren't that special. And the buffalo meat as well, you have to eat. A lot of people eat, the buffalo meat, but how many people walking around with body oil to make it? Okay, a couple on the junkyard deducted cat food. They had a pet cat, they deducted.
I think,
I think people think-
Rats with
Maybe.
junkyard.
Say yes.
A service animal.
Oh, right.
Yes, you're right. It was because they were eating the snakes and the rats. It was a junkyard, so it kept it safe for customers. That's why it depends. Now, I
Junkyard
think
cats.
that's my cat if I had one. I mean, what's the purpose? So you have to know what's ordinary and necessary in your industry. Okay, my significant other is high maintenance. I did the deduction for them. Okay, a man he hired his living girlfriend to clean the house, make the beds, manage several rental properties. Her duties included finding furniture, overseeing repairs, and running his personal household.
On.
that's a hardship.
Ordinary, necessary.
All that.
So make the bed.
Yeah. managing
Was she
those
clean?
rental
She
properties.
housekeeper? Was she a housekeeper?
Beds, plural.
Okay, so it's a trick question. So I should have been more detailed. This is to clean their house and make their bed. So that was not deducted, but to manage the rental properties and furniture, overseeing repairs, yes. So you have family members that you're helping, put them to work, stop getting the money, deduct them. You have children. They're good at social media.
Yes, they are.
Hire them. They can take out trash. I started hiring at 8 years old. They know the mail. Okay, we talked about this. I desire to fly private. Rather than drive 5 to 7 hours to check on their rental condo or be tied to the only daily commercial flight available, they bought their own plane. The IRS allowed that. All right, so we've kind of finished the deductions. We're gonna come back to it now. We kind of ran out of time, so I don't know what.
You got 30 minutes.
I got 30 minutes, okay. So let's talk about selecting the right structure for your business. I get this question all the time. Should I be an LLC? It depends. I need to know more. I need to know what you're doing. So how should you operate your structure? It could be difficult, so just ask a CPA, someone that's familiar with entity structure. A lot of times the attorney will set you up as an LLC. They don't do anything else. So you have to then elect S-corp partnership, or you're gonna default to sole proprietorship. If you have 2 people as an LLC, you default to partnership. So just so you know. So tax on business entities, we're gonna talk about the C-corp, S-corp partnership, and sole proprietorship and how it's taxed. And what you need to be aware of, not only how it's taxed, when you're choosing these entities, what happens with ownership and continuity? You become a sole proprietorship, if you die, your business ceases. So how do you manage that? Legal and liability protection. If you're a general partnership, you have no protection. So you need to make sure you're the right type of partnership. Federal and state income taxes is an issue. Some states tax S-corps, some states don't. Social security taxes, you need to know how that works with your business, and then other factors. Are all things you need to consider. It's more complex than just setting up an LLC.
Are there times where you go from one entity to another, you have to get a new EIN number?
Yes, there are times for that. Yeah. So you need to be careful. Now, if you go for an LLC, that's why I kind of like LLCs in Texas. They have good protection, first of all, asset protection. But if you go from a S-corp to a C-corp and you still have that LLC structure, you probably won't have to. So tax and non-tax issue, okay, we talked about that. So let's talk about the sole proprietorship. So we talk about that's a one-person business, you may be a DBA. What I like to say is don't commingle your personal and your business. Please don't do that. Because if you get audited, that means the IRS can see your personal bank statements and they can ask a lot of questions. So have a separate bank account, even if you're sole proprietorship, especially if you're, any other structure, you should know you need your own separate bank account for that. Credit cards, get a credit card for your business. It doesn't have to be a business card. It can be a personal card, but you only use it for business. The reason you want to do that is because then the interest is deducted. If you use your personal card and you commingle business and personal, you cannot deduct that interest that you have on that credit card. So you want it separate. So on the sole proprietorship, you're not registered with the state as a limited liability company or corporation. You just say, okay, my name is Catrina Craft. I'm DBA is Catrina Craft. Your sole proprietorship. You have not set up an LLC. Some states require license or permits. So you need to know, like, depending on what you do, you may have to get a license or permit. You're personally liable. So if something happens, what type of business do you have? Food. Okay, so what if somebody gets E. coli and you're sole proprietorship? They can come out from your personal assets. So you want some protection there. Simplest for tax purposes. Now, it's the simplest. So if you're just starting, it may be all right if you have the proper insurance to protect your business. I usually say if you're under 50,000, you may be all right staying as a sole proprietorship because otherwise you're gonna have you have the tax returns that are separate and it may start to become more cost efficient to stay as a sole proprietorship because it is the simplest. But when you die, business ceases. Okay, and a partnership, let me see how many sole proprietors again. Okay, anybody LLC filing as a sole proprietorship? Okay, so those things still apply to you as far as, if something happens, you die, your business ceases, but you have some protection. With LLC, you do have some protection, especially in Texas. Other states, it's not as good. So that's why I say it's at the state level, the LLC. In a partnership, it's a relationship between two or more persons. If you're LLC and you had two members, it's going to default to partnership. So you need to know that. You can still elect to be taxed as a C corp or S corp if you have two or more members in an LLC. But a partnership is not classified as a corporation. It's an agreement between potential concerns. If you have a partnership, get a lawyer to do that agreement. I've had so many partnerships that did not go well. One person wanted, say, a Jeep, and one person wanted a Rolls Royce. There was problems. So you just need to make sure that those agreements are strong to say what's going to happen in this partnership, okay? So the agreement addresses the potential concerns up front, like when do we want to grow? Do we want to reinvest all of our money or do we want to take it out? I mean, I have a partner, he wants all the money and she wants to go back and buy equipment. There's a problem. So you need to have those types of things really addressed. So that's why I say hire an attorney to write up that agreement that's strong. So if you do want to buy that person out, maybe you have the first right, like they can't sell it to their spouse. And that's another thing. Say you get a divorce. Got agreements in there that says what's going to happen. Maybe you don't want the wife to be in your business. You need some agreements. Okay, let's continue with the partnership. We talked about general partnership. You have no type of protection. You just say, okay, me and you gonna come together and form a partnership. Don't do that because you have no protection. Limited partner. So on the limited partner, you're only liable for what you invested in that partnership. So we want to talk about those good type of partnerships. You have buy-sell agreements, like we talked about. Who can buy when the partner departs? Sometimes events can trigger a buyout. So I've had someone who unfortunately passed. It was two people. So now his partnership ceased. Now it's not a partnership anymore because you don't have two people. So what determines that? What's going to happen? So you need to have all of that in writing to know what's going to happen. And a corporation Okay, I forgot to tell you this. A partnership flows through to your individual tax return. You get a K-1, kind of like a 1099 or W-2, just think of it that way. And then you report this on your personal tax return.
Now, partnership, you can have different levels, so someone can be 51%, someone can be 49%.
Yes,
Doesn't necessarily have to say that you're.
exactly. And I'm glad you brought that up, because in partnership, the one thing I do like about it, although it's a headache to do them as far as services, is you can say, we got 49, 51% in ownership, but you can say, I did most of the work, so I get 90% of the profit. So partnership allows that. It allows you, but it has to be in an equitable way. Like, you have to say why I did this. You can't just, arbitrarily say, okay, he's getting 90 this time because he needs income, and next month I'm gonna get the loss because I need losses. It needs to be a reason why that partner did that. Because some partners are really just silent. So although they may own 50-50, you don't want to allocate them 50% of the revenue because they haven't done 50% of the work. So partnership allows that.
So a question, in comparison to like a single member LLC, to trying to, because I've heard that that's looked at suspiciously.
A single member LLC.
But then trying to get partners or other members, I don't want to default to a partnership. So I'm like, is it best to stay a single member?
We're gonna talk about an S corp. S corp may be good for you.
So yeah.
Yeah, if you're trying to do that. Now, I don't think a single member is looked at.
I've heard some weird things.
Yeah, I don't think it's looked at now. Maybe they're doing something a little suspicious. LLC that's causing somebody to look at it, but just in general, no. Okay, so we talked about the partnership and just making sure some of those events, you need to have great agreements. So owners on corporations, your assets are protected. Somebody sues the corporation, you're protected. I don't know if you heard that they were saying Elon Musk filed bankruptcy on Twitter.
Yeah.
His assets protected because it's in a structure. That's how people are building wealth. Unfortunately, sometimes Trump, I don't know how many times he filed bankruptcy on his, but he didn't have to pay his creditors, so they got left with debt, unfortunately. But that's protection, because say for instance, you did something not intentionally and someone sues you. You don't want all of your assets at risk. Okay, so you're protected, you're independently liable and legal, and you're separate from the owner. So on a C corp, it has its own tax return and it files its own tax at its own tax rate. This one does not pass to you personally. Okay, so the current rate is a great rate, it's 21%. It's a great rate that Trump put in place for corporations. So I would say some businesses, it may make sense to be a corporation, but you gotta know your business, because then in 2025, what's gonna happen? Even Biden talked about increasing the tax rate. So things are always changing, so you just have to be prepared and ready.
I have a
to
question
make
about that.
changes.
The 8A, I'm an 8A contractor, and they monitor the owner's adjusted gross income. And since mine flows through my personal taxes, as we're growing, they're gonna, if my AGI gets to a point, they're gonna stop me. In a corporation, it won't do that.
They won't see it, but you have to pay yourself a salary. So only your W-2 is gonna be what's impacted by your AGI.
And that's gonna stop in 2025? Because we're still gonna be 8A.
Well, no, C Corp is still staying around. I don't know if that tax rate is gonna go up. We know that Biden tried to increase it and people like, no, he couldn't. But the first 50,000, prior to the 21 flat rate, the first 50,000 was taxed at a certain, like maybe 10 or 15%. So it still could make sense for you. It still may be lower than what, you don't want to lose your status. It may be worth it.
Okay.
Yeah, so we just have to look at that. All right, so it has its own tax return, which is the 1120. Okay, the battery, there it goes. All right, C Corp, the company is taxed, so we talked about that. Now the S Corp is, you have to elect this tax, okay? You have to file guarantees. That's the bad thing. So sometimes if you're S corp, if you're trying to get loans, creditors may require you to guarantee that. Okay? But it flows to your personal tax return as well. So it's like a K, it's like a 1099 W-2, it's a K-1, it's gonna flow to your personal tax return. So let's talk about limited liability companies. We talked about how it's like a state entity. It's not really a federal, because you have to say how you're gonna be taxed. So multi-member LLCs default to a partnership. So if you have two people that come together and do an LLC, you're gonna automatically be a partnership. You have to elect C corp or S corp. Else, only the LLC's assets are at risk. So we talked about sole proprietorship, your personal things are at risk, your car could be gone. It's sue you. Now, I do say too, because I like to tell my clients this, you may want an umbrella policy. If you don't have an umbrella policy, it's not that much. I think I may pay maybe $300 a year, and I got an extra $4 million. So if I'm in a car wreck, it's gonna protect my assets. Not that much. Look into umbrella policies to protect your business. You know, if you're in rents and things like that, you're not doing that intentionally. So please look at umbrella insurance. Pass-through entity. So we talked about pass-through entities, like when I say it's gonna pass through to your individual tax returns. So LLC members gonna pass through if you're sole proprietorship, your partnership, or S corp. All of that's going to pass through to your individual tax return. You need an operating agreement. It's going to tell you how money is allocated. Now, David, when we talked about the LLC and the partnership, LLC, if you're filing as a partnership, can do the same thing. You can say, okay, you didn't do that much work. We're going to allocate your percentage differently. So it gives more flexibility than the S corp straight if you're LLC and you do that LLC filing as S corp partnership and allocate that. So in the partnership, you're going to file the form 1065. That's the partnership tax return. So let's talk about tax on the business. This just gives you an overview on all of them are taxed. Sole proprietorship is on the Schedule C. Partnership, it passes through on your tax return, but you have to do a separate tax return. That's a form 1065, and then you get a K-1 to report on the individual. An S corp, you pass through entity, you report the whole business on 1120S, and then you flow through to your K-1 on your personal. And then there's two levels of taxation. I don't know how many of you have heard C corp is double tax. Okay, the reason they say that is because you get W-2 for earnings, it's taxed. And then if you have money to pull out as a dividend, like extra money that's left over from your C corp, it's taxed. So that's why they say it's double taxation. And you pay taxes on the income of your business. So you have double taxation. So how the tax system works, basically you add up all your income from all sources, you subtract adjustments, subtract your itemized deductions. This is on the individual side. You consult a tax table with the brackets. You subtract your credits, like you had earned income credit or you have child care credit. You deduct that, and a credit is actual money that takes away from your tax return. It's not like a deduction. So say, for instance, you have $1,000 credit and you owe $1,000, it would take your tax liability to zero. And then you add your taxes and you write a check. But I don't want you to write a check, so let's do something different here. So the standard deduction for 2022, we have $12,950. So if you're single, you're going to automatically get the standard deduction. So unless your itemized deductions like your home mortgage, your taxes, medical are over $12.95, don't worry about keeping all those receipts because you're going to get the standard deduction anyway. So these are the different levels of standard deduction, like married, joint, unless you have like taxes for your house, and it's limited to $10,000 now. I don't know if you know that, real estate taxes. So you may have $10,000 for real estate taxes, and then if you have, say, mortgage interest of 10, you wouldn't be over that 25.9. So it may not be worth you to even worry about, keeping receipts for all of that. And these are the different tax brackets. So you can see where you are. The IRS is a blended tax rate. So say, for instance, as a single person, if you made $170,000, you're almost in the 32 bracket, but what you need to realize is that between 89,000 and this 170, that amount is taxed at 24. So that's why it's a blended rate. So really, if you make 170, you're not paying 32% taxes. You're paying a blended rate. So between 89 and 170 is 24, 40, 189. So that's how it goes. It's a blended rate. Yes.
I don't pay taxes on my house because I'm a veteran and I'm taxes in. So can I still run my business or does that have anything to do with me running my business out of my home?
No,
Since I don't pay any taxes.
no, you don't pay the real estate taxes.
Yeah,
Right.
I don't pay
You're 100%.
no taxes.
Yeah. No, that don't have anything to do with it.
Okay.
You can still run the business, but you're not paying any taxes. You're not getting any deductions. I mean, you don't have any.
So I still deduct, so the taxes I pay on my home, I can deduct that for my business that I'm paying, right?
Are you paying taxes on your home?
No,
Okay, yeah. So yeah, if you don't pay taxes, if you don't pay it in the year of the tax return, you can't deduct it.
okay.
So say for instance, you got a bill
Mhm.
for real estate taxes and you didn't pay to January, you can't deduct it in the prior year when you got the bill. You gotta deduct it in the year, but you have to pay it. What are we looking like? Okay. So I want to give you all a real life example because I'd like you all to see kind of how you can build wealth with tax code. So Kim is married to Mark. They have 3 children, aged 12, 14, and 17. Kim owns a business. It's taxed as a sole proprietorship. The business gross income is 175 and her net income is 55,000. Mark works a W-2 job and makes 65 a year, and they file marriage joint. Let me tell you what I'm going to do for them. Before me, they would have income of 120,000. They would let's just assume those brackets are 22. I'm just going to do the flat rate. They would pay 26,400 in taxes. So wait a minute, let's use that tax code. I got them down to 12% because now they're in a lower bracket. I saved them 17,000 in taxes. That's using this code to build your wealth. Let's talk about how we did it. So the net income, 55,000 was Kim's as a sole prop, and then Mark got 65,000. So that was 120. That's before any adjustments, anything like that. I'm just doing straight income they received. So what I said is, okay, we're gonna start with that net income, Kim at 55. But now we're gonna rent the home for business. Remember I talked about that. So 13 days, I'm gonna let them rent that home. I did a low rate. So they got 3,250 deduction on her business. Then I'm gonna give her 4,000 retirement deduction. Who wants the IRS to pay for their retirement? Let's do it. Let's do retirement in your business. There's different types of retirement you can do. SEPs, solos, 401k, profit sharing. And you can deduct it in your business. Why not do that? Then I'm gonna give her the modest deduction, 4,000 business miles. They're $2,240. Travel, they took one trip, but they did more than one trip. 2,400 is low. And remember what we can do. Let's talk about this. Now her husband works in a business, so he has to travel with it for business. So now his ticket is deducted too. So that's how I got that 24. I'm sorry, the 22, yeah, the 2,400. So that's gonna be travel 2,400. That includes a ticket, a hotel, Ubers, and meals. I just lumped that all together. So that's low. That's on the low end. Then I'm just saying, Kim goes one time a week and spends $50. She takes out a client, a prospect, employee. Deduction 2,600. That's on the low end. $50. I mean, you can order a Chick-fil-A. Okay, it's Kim's salary. I want her to pay herself a salary now. So that's 25,000. So I do have to add it back here because that's her W-2. But that's a deduction. She pays herself, she gets a deduction, and that's reducing her income. Husband works in the business, pay him 5,000. So I added that 5,000 there. Then we're gonna put our children to work. They're gonna get $100 a week. 3 children, $100 a week. That's $15,000. Kids don't have to see that if you don't want them to, but they do need to have a job description, trash, social media, answer, mail, whatever it is. They have their job description. You can put that in the savings account for the kids or their allowance. Let them start budgeting and learning about money. We want to grow this wealth, so they need to understand. You just can't come to mom and daddy every time you need money. Look at what's in your account. Then training, educational conferences, you asked about that, so I'm gonna put 2,000 there. So now her business is at an $18,000 loss. What we're gonna do with that? We're gonna move it to the tax return. So I added the -18, then Mark 65 salary, this 5 he got from the business, Kim's 25. Now we're at 76. That moves them to a lower tax bracket. That's another way you gotta realize, look at those brackets and see where you're gonna be and what we need to do to get under there. You may wanna pay a little bit more just to get under that bracket. Save them $17,000 in taxes. You can learn that code.
So, question, as a business owner, if I do my retirement inside of my business, do I have to offer those same benefits to my employees?
You do in some ways,
Okay.
but you can do a 401k that is called safe harbor.
Okay.
And that safe harbor allows certain business owners and certain classifications to contribute more than you would contribute to your employees. But you may have to do a 2%, but say maybe you could do 5%.
Right.
So there are some things that you can do for that.
Okay.
So you can't put it just to an IRA, so like me and that's whatever, can I just do it to an IRA?
If you do an IRA personally, you want to cap out at certain income levels. You can't do an IRA that's tax deductible. You can do an IRA, but it won't be tax deductible. Now, that's just a form of doing it, but you can do a SEP plan and put it into an IRA or a Roth. So a Roth means it grows tax free. You pay tax now. I would recommend that to anybody that's probably like under 50. Your money gonna grow tax free. You can pull it out and pay no taxes on it, but you pay taxes now. So I would recommend a Roth to anyone, and then an IRA, you pay taxes later. So if you think you're gonna, I don't know, how many people think they're gonna make more money later than what they're making now? So you may want to do a Roth, but if you feel like, some people feel like, oh, I'm gonna retire, I'm not gonna have that much money. You may wanna wait and not do a Roth. You may wanna wait and do an IRA and then defer when you pay taxes. So that would be just a traditional IRA.
On the children, do you have to show them on the payroll?
Yes.
Okay.
You're gonna show them on the payroll. They're gonna have taxes taken out on your escort. Guess what? You can pay your child up to almost $12,000 and they pay no taxes. Because they're getting that, remember we showed that single and that standard, they're gonna get that. So you can really pay your children, but I said $100 because they gotta work. You just can't put it on. You want them to do something.
I might be missing it, but when you say Kim paid herself $35,000 versus taking the, seems like they kind of balance out.
Well, here,
Explain the
yes,
advantage.
I added back here.
Right.
Yeah, so these two kind of almost balance out. But the reason I paid her that, because as an S corp, the IRS is looking for that.
Oh.
Didn't know if you knew, if you're S corp, there's a line that says compensation of officers. That's a big red flag. You need to have something there if you have a profit.
Okay. Thank you.
Yolanda?
I was gonna ask, when you pay the kids, are they exempt from taxes?
You can pay them up to about, I think it's whatever that itemized deduction amount was. Standard, okay, $12,950 in 2022, and they don't pay taxes. No, you have to file. Now they can file because if you're taking taxes out, they get a refund. But if you want to, depend on how much a tax preparer costs. I just had someone, their kids got $5,000, and then they were going to get things that's $95 back, and I said, you want me to file this so they get 95? They were like, no, because your fee gonna be more than $95. All right, so that is using the tax code to save money. I have got over 1,600 tax strategies to use for business owners. We don't have enough time to talk about all of them, and it's depending on your circumstance, but this is just a few of the things that we talked about. So where do you go from here? I know it's a lot. It's a lot to take in. But the first thing I want you to do is get ready now. Don't wait till April 15th. Can you start looking at your records now? It's not too late to hire your kids. It's not too late to do your home office. It's not too late to track your minds. So I would say you have November, after November, December. To still take some deductions. You got office party coming up, rent your house. Got 14 days, you can still rent your house to yourself. It's a business. I had a client, she did a vision board with her team. Had food, everything. It was a 2-day vision board party. She wrote it out. So let's talk about this. These are things that we do. I do customized tax plans for business owners, and then I help them implement those plans. So if I say hire your children, I'm gonna help you do a job description, time card, all of that, follow the rules. I don't want anybody to be audited and unprepared. If you're audited, we're gonna be prepared, because we're gonna have everything that we need to do it. Okay, the IRS system, how you can use it to make money, timing. So it depends on when you pay something. Say, for instance, this year, I don't need any losses. So wait to buy the equipment January 1st. If you need it this year, let's go ahead and do it December 31st. You can put it on your credit card. It's still 100% deductible. You don't have to pay cash. Shifting, we talked about shifting your high tax bracket to your children or your family. My mother comes to me in my business. I pay her. I'm shifting some of my income to her. She's in a lower tax bracket. So this is shifting to family members. The code section, using that tax code we talked about. All those pages of tax code, we want to research those. And then different products like life insurance, your SEP plans, your retirements, all of this is a part of your strategy.
So, I guess, like in some cases, in between the business owner and the accountant, you can have a bookkeeper and all they're doing is doing their records for you, and then you ship all that to the accountant.
And I would say, don't wait. You need to be meeting with your accountant and tax strategist quarterly. So like my clients, if I'm not meeting with them monthly, I'm meeting with them quarterly, because I'm saying, your S corp, I'm looking at their K1s and I'm like, you need to pay some taxes. I'm looking at their estimated taxes. I'm telling them now, like I'm having meetings now, you need to buy some new equipment to get this down. You need to pay yourself more salary. You need to do some, bonuses. So if you wait, it's too late. Like right now, if you all have a bookkeeper, get your books in order. If you have a tax preparer, meet with them. That's an action step. Before December, I say December 1st. You can, because you still have a whole month to take action. There's some deductions that you all may have learned about you're not taking. Let's do those this year. So do you want to maximize the money you keep? How many want to maximize the money they keep? I hope everybody. And you want to minimize your taxes, but you want to protect your assets and plan for retirement and have a state to leave generations. That's my goal and my desire for everyone, including myself. So knowing what deductions you can legally, now we're going to stay inside the law now. There's a lot of ordinary and necessary that we can take. So we want to know what we can legally do to reduce your tax burden, deciding what's the best entity structure. We talked about how the entity structure can be important, like for you. It's very important on which entity you're going to use and protect your assets. So I do have a crap money map, tax planning, and pretty much I work with business owners, mostly in professional services. I don't do all types of businesses, unfortunately. I don't do restaurants. I don't do construction. And I don't do a lot of inventory. Now I have worked with restaurants. I have worked with builders. I do real estate. I love real estate developers and investors. And I work with doctors, dentists, entertainers, consultants, and different professional services. That's pretty much who I work. So I do have, I'm on YouTube, Instagram, and Facebook, and LinkedIn under Catrina and Craft. I do YouTube videos talking about tax strategies. And if if you go to Catrina M. Craft, you can sign up for my wealth tips. I do video wealth tips as well as different wealth tips. You can sign up for that. That's it. Any questions? I want to make sure the questions are answered.
So we talked about the IRA, the request IRAs. You use them to invest out of and also pay yourself. Like which tax bracket are you? I
Okay,
guess,
tell me what you're doing with me. I want to
so pretty much when I roll some money into it, and I'll be investing out of it.
understand. Okay,
But then as that investment makes money, I want to pay myself and then like pay for things like expenses.
okay.
equipment,
Is it a self-directed IRA? Okay.
There's no requirement to contribute to it.
Okay, so usually the IRA, you're gonna put it in there, and then if you take it out, you can be penalized. So that's why I wanna make sure you can take it out, but you're gonna have a penalty for early withdrawal.
But if it's used for investment, I guess you're saying the penalty is for like personal.
Yeah, taking it out. If you use it for investments, like other than stock or things like that, it must be self-directed. So there's something called self-directed where you can get an IRA and you can invest in real estate, you can invest in businesses, but then you can't self-deal, which means you can't operate and self-deal and benefit. So that's why I want to be careful on what you're talking about. Self-deal means you're operating the business and you're pulling out money from that business. Can't do that with your
Trying to use
IRA.
it as my bank, like my personal little,
No.
no.
Yeah, we can talk, because I want to make sure that you're clear, because I don't want you to pull money out and then you'll have a penalty, 20% penalty, plus you got to pay the tax.
My question was really off based on her question earlier. So can she, if she's looking to raise capital as opposed to taking on a partner, can she sell stock and just take on investors?
You definitely do that. You can sell stock or peer-to-peer lending. I see that all the time where you just go today, and you don't sell them stock, it's just like, can you invest in my company and I'm gonna pay you 8% interest?
And that doesn't make me a partner, that makes me more of an
Investor, you're an
Right.
investor, so you can do that.
Right.
Do you have a question?
On the S, you talked about the S&P over time.
Uh-huh.
And if I invest, let's say $20,000,
It's,
I want to throw in, does that come back to my personal taxes? Is that showed as income or not?
No, you're investing, so it's a deduction on your business tax return of 20,000 for the SEP, and you deduct that. So now that's in a retirement account. It's only taxable when you pull it out of that retirement.
I have two questions. The first question is, for me, I, bootstrap my business, and so I work and then I'm taxed from that. So then also once I pay my taxes with my business, am I taxed again from that? So I would, if I didn't make any profit, would I be taxed again based off of the income that I brought in, that I used to?
No, so if you get a W-2, you taxed on that. Then you use that money to put in your business. If your business has a loss after all your deductions, no tax.
Okay,
Yeah, so that's why you want to maximize those deductions,
okay,
so you won't be taxed.
okay.
January.
I'm gonna do the last one.
Okay.
I sold a house this year, right? $100,000 profit. And I would have lost, I have a rehab project next year. Right now, it's a solar project. What would be my big strategy to minimize, like, which I mean,
Is this a business, property or individual?
this is individual,
Your home?
this is investment property.
Oh, it's an investment property, okay.
And
So
right
you
now,
bought-
it's a total partnership. I wanna get a new tax ID and get it set up correctly next year. It was inherited from a.
Okay.
So basically, we sold a house this year and we have all this money,
Mhm.
and now I need to figure out how I can minimize.
It was inherited?
Yeah.
Okay.
Yeah.
So you gotta step up in basis. So that basically means when that person died and gave it to you, you now got the value on that date.
They
So-
died like 8 years ago.
They died 8 years ago, so now it's increased.
So now it increased.
And it's 100,000, you deduct all your
You know something?
expenses.
I don't know.
Let's take that offline.
Let's get it off.
Yeah, let's take that offline. I mean, I'm right there, boy, you done made money and lost money, same conversation. First off, I wanna say thank you, Yeah, right. We have to definitely tell her thank you. You know, and she came out of the goodness of her heart, because when we started doing this, we were like, you know, honestly, she didn't say this, but her basic customer, I say basic customer, is typically $500,000 and above. Okay, but you don't get to just dealing with people with $500,000 and above if you haven't been working with people way under, you know, for a while. So when she heard about this opportunity, she was excited. Now, I'm sure some of you guys are blowing $500,000 out of the water. But for those of you who aren't, she doesn't see you any different. She wants you to be able to get to that point. Does that make sense? So she has a vested interest in you guys growing. So one day y'all can become, you know what I'm saying, one of her permanent clients. But she still all the same drove from wherever she's at, this big chateau in the north. Come on down here and share with you some realistic principles that we can apply. So did anybody get anything out of class today? If you got something, raise your hand.
Yeah.
All right, absolutely. We couldn't let you come and do this for us without sharing with you a token of our appreciation. You know, okay. And so it's the holiday season, go grab you something good. We just want to tell you on behalf of DCED, thank you so much for your time.
Thank you
All
for
right.
inviting me. I enjoyed it and I love just educating. So go to my sites and I always send things to people. And I do answer questions sometimes.
So she's giving you all of her information, but again, these dinners would not be possible if it was not for two very important entities. One of those is Dallas College, the lady Kristen who came in earlier and welcomed us. And then also the Dallas Collaborative for Equitable Development. I just call it DCED. So it's not your home where you grew up with. DCED is actually a foundation that has helped pay for this and sponsor a grant. And what Kristen was alluding to earlier is that part of this is that we are opening a co-working, I say we, like I really work here, but they're opening a co-working space right across the hall for people to be able to come and have an actual office structure with meeting rooms and podcast rooms and webinar booths so that you can have what these larger companies have. So as you do what I say, fake it till you make it, okay? You can have all access to those things that a lot of the larger companies have. So we definitely want to recognize and thank them. Now, some of y'all have been here for a minute, okay? We started off this past summer with talking to our restaurateurs, then our trucking people. We brought in somebody to talk about using the media for your business. Then this lovely lady right here came and talked about business tools and resources. This gentleman over here who asked all the questions came in and talked to everybody about the value of customer service. Because a lot of times we're so busy being focused on building the business, we forget we can't build it on the back of people. We got to build it with people, okay? And customer service makes a difference. Then we brought in a lady to talk about accounting and doing your numbers. The gentleman came back to talk about how to do online marketing and developing your persona. Once you have that persona, how do you make, you know, your brand? Because your branding is your foundation. The little gentleman who was over here, stop calling him little gentleman. The gentleman that was over here a little bit earlier talked to us last Thursday about budgeting, making sure that you don't bust your budget before you get started. And this lady came over here to talk about building that wealth using the tax code. So we have concluded these for the year. But I told you guys I had a couple of bits of announcements. We just got approved last week to put on 4 more of these. It was a grant that was set to end in December. They have renewed it through the first quarter of January because they're seeing the impact that it is making. So no, I haven't planned those yet, okay? But as soon as I do, please check your emails. We don't try to spam you. Believe me, that's a real person that sends you a text. That's Tiffany. Okay, they say, hey, I don't want you to get lost. They changed our room, whatever. But we want you guys to know about it as soon as we know about it. So I hope to have those planned out before the end of the year. So you'll know 2 of them will happen in February. 2 of them will happen in March of next year. And so, but we don't want you to just be bored until then. So you will also get an announcement coming up very soon for a class. It's 3 weeks long. It starts on November the 29th, and it's every Tuesday and Thursday at this same time at this same building. It's in our space that I was telling you about. And it's all about how to use QuickBooks. So I know you guys are QuickBooks experts, and you don't need this, okay? But if you just happen to need a little bit of something, it's a free course, 6 classes. All we can take is 20 people, all right? So as soon as I release that information, what do you need to do? Sign up and show up. Okay, there's a reason why we fill out y'all in this way, because we know folks trickle in, but it's a lot of people who don't show up. So please don't take those spaces away from other people because we can only put 20 people in the class. That being said, I've already uploaded today's presentation. They're not the recording because hey, it's still going. Okay, but I've already uploaded her presentation. I say y'all, especially him on this little phone, he rolling, trying to get, trying to get his phone to record. Stop teaching, sir. But that is here under Linktree/Speaker Series. This is where all of our information is. It's Linktree with a dot between the R and the E /Speaker Series. If you go there, you will see a recording from pretty much all of the presentations we did this year, so you don't miss those. It also will include contact information for all of our speakers. It'll include their presentations if they agree for us to release them. And it also includes our post survey. So part of the way I'm gonna figure out who's coming back for these 4, if I decide to do any repeats, is based on who has the most survey input, and then also anything you say that you're interested in. So if you guys will scan this QR code or type this in and go to the very top, it's gonna say post survey link. I literally just posted it, so let me know if I messed up something. But actually take a moment and say, was the food good? Was the temperature right? How was the AV equipment? That kind of stuff. And then also give me your comments. Now this second barcode is an even bigger one. All right, and that is because Dallas College has an emphasis on promoting small businesses. So they have a link tree as well. It is linktree/DC Small Biz. DC Small Biz stands for Dallas College Small Businesses. We just knew you were gonna type all of that out. But that's got a lot of other opportunities for you as smaller business owners to be able to get additional assistance outside of these speaker series. They are right now planning all the things for next year. So please bookmark that, set an alarm 30 days from today, 15 days from today to go check it out, because they're gonna update it with the new stuff soon. And I want you guys to get the info before everybody else. All right, so please complete that survey. Let us know what you think.